And we're live. Welcome back to the Weekly Roundup. This just in, if I own a business and I work 40 hours a week inside the business, and while I work 40 hours a week inside the business, I produce $100,000 in profit/pay to myself. And Carol owns a business. She works 4 hours a week, and her business also produces $100,000 in value and profit. Which business is more valuable? Carol's business. No one would ever answer that question another way unless they're silly, in my opinion. Anyways, it's so obvious, but the thing that's interesting is how much the actions that we see being taken are incongruent with that very obvious statement. And here's the extension, and I'll tell you why this is on my mind right now, and we have got a few things that tie into this. The extension of this is every studio owner, not every, the vast majority of studio owners that I talk to, myself included, open their studio and the vision ends at, I'm going to get the studio up and running. We're going to get classes going. We'll teach the classes. Maybe we'll have some employees. We'll make some money. And like, that's it. And it's an old saying that you should always begin with the end in mind when it comes to business. You should always be thinking right from the moment that you're planning your business, what is the exit strategy around the business? The thing that's unique or interesting in the yoga world is that it's not uncommon for the entrepreneur or the business owner starting the yoga studio to be so passionate and impassioned and so mission driven in what they're doing that they do not think about exit strategy at all, even to the point that I've had a new owner say to me straight up, like, well, I don't actually plan to exit this business. And that was fascinating because the hiccup becomes, if you don't, what is it? If you don't plan, you fail to plan, you plan to fail. What's the, something like this, but you have no target. There's nothing that you're like aiming at. I had a podcast yesterday with Mitch McGinley, who many of you know and have talked to, and he is a yoga studio business broker and a preferred partner of the Yogapreneur Collective. And in any case, he and I talked about like, what is it that's happening when someone comes to him and says, I want to sell my studio? The number one reason people reach out to him to sell their studio is because their lease is coming to an end. And the majority of people that come to him to sell their business wants to sell it in the next 3 months of time. Then I asked, how long ahead of a sale would you start like really planning and getting things looking a certain way or whatever? And he said, you probably want to start like at least 2 years or 3 years in front. So it just, there's this incongruency with the plan for when this needs to happen versus how long of action you would have to take for that to happen versus what makes a studio actually valuable. Because the other big thing that came out of this was just that, going back to the original statement, the first thing that a buyer asks is, tell me about the staff. They want to know about profit and money. And the very next thing they ask is, or the number one question, tell me about the staff. Because if I'm going to buy a business, first I have to be interested in the type of business. I have to have the means to buy that business. And if you don't have your staffing and your systems in place, then you're asking me to buy your job from you. And when we look at it that way, it seems insane. Can you imagine if imagine the garbage truck guy that goes by your house, knocks on your door and is like, hey, if you pay me $200,000, I'll let you pick up this garbage. Like, it's fucking insanity. So I don't know. There's my rant to get us started for this morning. I know we had a couple other things associated with what creates value in the business, staffing, etc. But let's kick it off there. Go ahead, Terry.
I was going to say, when you said that is, I use Mitch to sell my business both times because many of you know my studio was slated to close on March 18th, 2020. and this little thing called the pandemic happened, broke. Anyway, I was often asked, I've been asked many, many times, is Terry, when did you decide to sell your business? And my answer is always saying, I decided to sell my business the day I bought it. Because and I've said this before, because I was not from Massachusetts. I did not plan to retire in Massachusetts. I was 53. I wanted it for 10 to 12 years. So just to Josh's point, I had that end game in mind the entire time. And it really does make a difference, because I was very tactical, very strategic about what I wanted to accomplish with the business so that I could sell it, because I looked at this as a business. I had no safety nets. It was do or die. It was sink or swim. It was like, if this doesn't make it, okay, I don't know what I'm going to do next. So, and having that clear vision, I didn't recognize it at the time because it was just where I was in my life. But oftentimes when I ask my clients, particularly the really younger ones, and even the older ones like myself, but particularly they're like, what? Why would I think about wanting to get out of the business at some point? And you never know. If you're young, you might decide, if you're a female, a female who can bear children, you might decide that you want to have kids, and therefore you want to exit the business to raise your family. Or you might decide, so just, it's the really good thought experiment, and no more than an experiment, is what is your exit strategy? I think it's so fundamentally important, Vicky.
Yeah, what this kind of brings up for me is the difference between working in your business and on your business, which I got pretty deep into that on one of my calls this week, because I was helping a studio owner time block their week, and we got into the discussion of, well, what is this? Am I working on my business here doing this stuff or not? And it was actually really tricky, because when it came right down to it, to me, almost all of it was working in the business. It was kind of very little that was that high level working on your business. So if it isn't your job, if you're not like selling or buying a job, when you're selling or buying the studio, you should kind of be at the level where you're not really involved. Otherwise, you're selling a job, or I don't know, like emails. She was like, emails. I do emails. Is that working on my business? And I'm like, well, no, most likely not, unless they are to do with high level planning and projecting. And no, I don't think so. I don't. Josh, Terry, what do you think? What's what?
Well, I think the email one's a good example. Here's what I would add to that, Vicky, to your point. Like, if you're still answering emails in your business, one, that's not working on your business. That's in your business in 95% of cases. Two, here's the bigger question. We talk about like value and exit. And just to back up to Terry's point, whether you sell your business or not isn't the relevant factor. It's that you don't want to have a business that isn't sellable in the moment that you would want to. And the purpose of building a business as an entrepreneur, so when you like step out of, I'm just going to buy myself a job and become a yogapreneur, is that you're building something external from yourself, which creates value in the world and is therefore valuable. So the path is the same. Anyways, here's the food for thought on the email thing. I was thinking, Vicky, as you're saying that, why are emails even coming to you? Like, when we're talking about building a valuable business, if you own the business at the top, your email account, why would you even need to answer emails? Basically. Not that you'll never have to answer any, but if that's like something that actually requires a daily input, I would challenge the entire equation. Yeah.
Yeah, I never answer emails for my studio. It's very like, I might check, like they might copy me in, so that I just kind of, I've told them to just copy me in on the nice emails though. Don't copy me in on anything that has to do with like cancellations or anything that will get me depressed. I don't want to be copied in on those. Just copy me in on the things that are gonna make me happy, and then I will read those. But I very rarely write one.
Well, I do want to just add two thoughts to this. One is that if you're at the point in your business where you're just starting out and you're like, what do you mean I can't answer emails? Because you're building, you're really in that building stage, that building phase, and you do need to answer emails. Then define a time when you're going to do that. Like, you're going to check your email. I got into this. And one thing I did learn is don't look at your email at 10 o'clock at night before you're going to bed, because then inevitably you're going to get that nasty email right before, and you're tossing and turning all night trying to, going up and down, going to the valley of despair and all that kind of stuff. But say, okay, I'm going to check my email in the morning, in the afternoon, like 2 times a day. I'm going to spend this amount of time doing it. And then that's it. So that you're not getting sucked into all these. And then as you build your team, and that's why I would even suggest, if you're just starting out, have like in addition to your Terry at nomadbusinesscoaching.com or nomadyogastudio.com, have a team set up a couple of different email accounts that then it's very easy, like membership at or whatever. So then when you build your team, it's like, okay, Carol, you're now responsible for this email box. Vicki, you're now responsible for this email box, so that then your personal email is truly for things that you need to deal with as a business owner. And the other thing I was just kind of circling back to Josh said about, Vicki, you said about working on versus in. I've had a couple of post-summit follow-up calls with some of our clients who went to the summit. And one thread throughout all of it, beside the fact that you guys, I heard this a couple times, God, you guys really know how to work and play hard. That's why we have hashtag work hard, play hard. Is that they really appreciated the deep focus that they were able to get by stepping out of their business and spending some time away. And they said, like, during the labs, we carved at 4 hours. For 4 hours every day, it was all in. And we got so much done in those 4 hours because that's all we were focused on. And that's something you can absolutely do. Vicki was talking about time blocking. That's something you absolutely can do for yourself in your own business. Carol.
Yeah, I just wanted to go back to, when somebody's looking at your business, when we were looking to sell, in addition to financials and the staff, the next question is, okay, what do you do as an owner day to day, month to month, week to week? And if you're starting to look at it through that lens and it doesn't look desirable to somebody else, I think those are the first things you offload, right? Even if you're not looking to sell right now, if you look at it from that standpoint, if somebody else would not buy that job from you, start to offload it, and that's a good starting point, I think. Josh.
Oh, I love that, Carol. I think you're exactly right. And it adds to this idea that, like, if you take yourself out of the business and look at it and you yourself wouldn't buy at the business, that's the indicator, right? Like, why would someone spend the money for getting it? It just, by thinking about the exit, by thinking about the end, by thinking about your business from a sales standpoint, regardless of you selling, to your point, it forces you to reevaluate the actions you take right now today. Here's a really specific example. It came up on the call with Mitch yesterday, but also I've talked to him and experienced this myself and everything a few times. If you are the pinnacle person required operationally in the business, then it goes back to, I actually can't buy your business, because if I lose you, I lose value from the business. Versus if you build the business that it doesn't require you to be as successful as it is, it's significantly more valuable, like immediately, basically. And the truth is, it's like really hard to find a buyer for a business as well. So you need to consider that it's a competitive sale landscape thing that's happening. Here's the other really specific example. No shade, but we all know that a large portion of yoga studio owners do really silly things with how they pay themselves and structure the business from a tax perspective. For example, you set yourself up as an LLC S Corp for good tax purposes, pay yourself a minimal salary, you write off a whole bunch of stuff. But the big thing is that write-off, like, you put all this other stuff into the business. Now, businesses are good vehicles for tax write-offs, but here's the hiccup. If you write off a bunch of stuff in your business, but then don't pay yourself, an actual fair wage for the like CEO level that you are in the business, then when I look at your business, you can try to explain that to me, but I will immediately argue against it because it's only what's in the books that I can actually go off of as truth. Because as a buyer, I'm going to be very skeptical of everything. So if you're paying yourself, let's call it $20,000 and have a bunch of expenses in the business that are silly, then when I look at buying it, I would have to say, well, I couldn't afford to pay somebody else to run the business what you're paying yourself. So again, it's just, if you're looking at how do I create the most valuable business and that 2 to 3 year time frame in front of it too, then you do things differently. You pay yourself differently. And Mitch made the really, really poignant point of like, okay, the tax savings of X percentage on the differential in that pay is like a few $1,000s a year. But if you're looking at a multiple of EBITDA as the way that you would value a business, then that tax savings, let's say over a 3 year time horizon, saves you $10,000 in tax. But by paying that $10,000 in tax on the extra 100, 200,000 that you end up paying yourself in that same time frame, you like double or triple the value of the business on paper. So without getting into the weeds on it, it's the point that with the end in mind and looking at taking yourself out of it, it like affects your day-to-day strategy now ahead of time, which again, Terry, to your point, if you're brand new, you start thinking about this, you're on a path towards it. It's more like a mentality of approach when you're new that you have to have. Go ahead.
The other thing too, and I've seen this happen, and I know someone who did this she could still be doing it, is there is that temptation. And again, this is no shade. You own your own business and it just depends on how you want to run things. Is not recording all the cash you take. And I've seen that happen where you sell a couple of annuals or you do this, or you're like, oh, and sometimes it makes me wonder about businesses who still don't take credit cards, because I would bet dimes to donuts that's exactly what they're doing. They're pulling a boatload of cash.
That's exactly what they're doing. That's exactly what they're doing.
Yeah.
Can we be real? What business out you think the tattoo parlor, that dive bar that you and I went to and met that awesome bro at or whatever that only took cash? We're like, there's no fucking way that you're reporting Smash. It was his name. Or their name, I suppose.
Their name.
There is no fucking way that bar is reporting the cash is coming out of that cash register and going back into it. Like, no way.
Cautionary tale. If you are pulling a lot of cash out, and again, it comes to one you want to sell, it's like, oh, well, my books show that I made this much, $250,000, but I really made $350,000 because I pulled $100,000 of cash. You have no record of that. There's no record that you pulled that cash out. That's why, again, for me, day one, every bit of revenue that I took in was reported because I wanted to show accurately what my business brought in revenue. And of course, even then it was like, of course, nowadays it's probably even higher, but even though it was like 90+% credit card, I still did take in a fair amount of cash back in the day. So just, again, it's a cautionary tale. Just be aware of the downside of pulling a bunch of cash out of your business, Vicky.
So here in Europe, in some of these more high tax countries, well, it's not the cash is not really what people do here. It's rather paying yourself, so avoiding paying tax on your own salary, which in many countries that means everything is calculated on your taxable income. So it affects a number of things. It affects the pay that you get if you get seriously ill or you can't work for any reasons. If you are pregnant and you want to have maternity leave, it's going to affect your pension. So all these things, you don't have any of it if you don't have like a good taxable income. And the other thing that it affects is your ability to get a mortgage. If you can't show that you have been paid, you have this taxable income, you can never get a mortgage and buy a house. But it can be really high. So I think here in Sweden, it's like 30, like tax on top. I think it's around 30%. So as an employer, anybody that is employed in your company, kind of including yourself, you have to count on that salary plus 30%. It's a lot of money. The reality of it is that studios can't afford it, which is so sad. That's like a whole other rant. We should all be charging so much more for yoga. That is that's the root cause of everything, is that yoga is massively undervalued. Because yeah, it's really sad that owners just can't afford to live, kind of above board with their earnings.
Truth. It's the same thing. Like, this story is the same everywhere in the world. It's just the proportions of it change. Canada is not nearly as bad in the specific description that you have for most of Scandinavia, I suppose. But it's really hard. Like, Canada is way higher taxation in that way. There's a trade, you get certain services like you're saying or whatever. But the United States, I guess the one thing I would just say is set up more than any other country to play a game around tax reduction. Like, that's the system itself. So that is a game that you should play as an entrepreneur. But this is an awareness question about value of your business and what actually makes your business valuable. Side note to finish off the cash thought too that Terry's bringing up. Like, I've been living in Mexico for 6 years and a bit now. Like, everything's cash here, any small business, anywhere. And it's almost like, and this is my personal experience and conversations I've had, so that's all it is. But like, it's actually spoken about as like probably just an accepted truth that there's a bunch of non-tax being paid around all sorts of different things, because that allows for the existence of businesses in a special way here, because it's all cash. I don't know. The whole thing is very quirky, but also I love it. But it's like, then you go, and a friend of ours had a business in Sayulita here downtown, and she wanted to sell it. And she had been operating with her Mexican husband in that way. And they had a shit time trying to figure out how to sell this thing, because they had nothing to show for it. Like, basically, in the end, the reason it sold at a terrible price was because they had a slightly better lease rate than the market, and they could transfer it, luckily. Although I think they had to pay off the landlord for that to happen. And they had inventory in the product they had. It was an asset sale and a transference of lease, not a business sale. So on a small level, it was just exactly what we're talking about. What does make a business valuable? Because this will take us to our next thing. The first thing is, what does not make your business valuable? Just so we're really clear, potential. Potential is worth 0 to a buyer. It doesn't matter how much potential your business has. Only provable, actual things that are happening will make your business more valuable. And again, if you think about the end in mind, it lets you clean up your actions right now and be like, oh, but if we just did this, this could happen and that. Cool. Then do those things. Like, actually make them happen in the business, spend the time optimizing them, go back in, measure them, make them better, because ideas are shit and launching is everything. What makes your business valuable? Money, straight up, not just total revenue, profit. It's EBITDA, it's profit, right? That actually makes your business valuable. But then the last one, and this will kick us off into maybe Carol, I know we were talking about this before, is staff. I think that especially a service-based business, the hidden job that a lot of owners don't realize they're signing up for is staff management, is becoming like an absolute HR monster professional. And everything through from like hiring people to training people to systems to management of them to firing them to whatever, like, that is a big department. And if you get it nailed, I promise you it pays back in spades. If you don't, it will perpetually come back and hit you in the face with difficulty. That's just the hard truth of what it is. I don't know. Carol, what are you seeing with staff? We were talking about it before.
Yeah, a few times in the last couple of weeks, I've had studio owners that are struggling with managers and trying to figure out whether the best route is to try to replace them with that unicorn person that can do everything before, or if we go the route of taking some already existing staff members and offloading just pieces that this, like maybe there's a staff member that is really excited and strong at retail, and that person could have their teaching hat and the retail hat, and then whatever else the general manager is helping with. We've just been talking through, like, I don't think that there's a one right way to go. But I think that there are some people now that are finding that it's difficult to replace that one person. And they are also having issues getting rid of that person because it is such like a heart-centered business at this point. All right, bye, Vicky. Have a good class. Just heading off to yoga. So yeah, there are these, and I know we've talked about it before, where it's like, when you know that this needs to happen and you've been feeling it for a long time, and just pulling the trigger and finally getting it done. And everyone that's finally done it feels really good about it. Now they're in a little bit of, this limbo right now, because again, they're trying to figure out whether it's what the next moves are. But when there's somebody in your business that if you don't want to go work with them every day, or, the interaction is like giving you anxiety, it's a really good indication that it's time for them to go. Josh?
Yeah, the cost, the energetic, emotional, psychological cost of a non-culture fit in your business is so much more than whatever they bring to the table in the vast majority of cases. The only time I've seen it where it isn't, it's because actually the owner was the problem and they needed to reevaluate their own commitment and enthusiasm in the business. But other than that, like, it doesn't matter how good their class performs or how many classes they teach or what they're managing and what tasks are going to come on your place. The cost of that is so much higher. This came up at the summit, actually, Carol, you're just reminding me as well, that the kind of harsh way to say this is this: the second that you rationalize an employee in your business by saying, well, their heart's in the right place, or they really believe in the thing, you're basically saying they fucking suck at their job. And that sucks, but is also something I hear in the yoga world like a lot. Like, oh, but they really care about their students. These regulars really like their class. It's hard. This is hard. Another example, this came up for me yesterday, and Terry, you brought it before the call, so maybe I'll let you take this, is how this plays out. Like, what does this look like where, and this shows two things. It shows a staffing issue in a certain way, more like structurally, but also shows like a mentality of approach, a paradigm shift that has to change, and it comes to the schedule. Go ahead, Terry.
A lot of conversations about schedule lately and teachers on the schedule. And I had with a client, we did a little 911 call last week before the U.S. Thanksgiving holiday around a teacher, and just listen. At the end of it, I just asked the question. I said, do you want this person to be part of your team? And he said, no. I said, then why are you waiting? I said, let's get it done. We talked through how I was going to do it. And the other thing is, this person only taught like it, and oftentimes, well, it's not, only taught like 2 classes a week. It wasn't like going to leave a huge gap in the schedule. Anyway, long story short, we talked through it, and then we called it. She was like, actually, she was okay with it, because she just found out she was pregnant. She was probably going to not be teaching anyway. And it was just like, he was just like, oh my God, it was such a relief. So to the point is, if you have decided, like Carol said, if you're not wanting to go to work or avoiding the studio and that person, that's a good one. If you're avoiding going into your own business when a certain individual is there, you need to get rid of them, regardless of what happens, of what the fallout is, right? Anyway, but going back to the schedule is oftentimes I see, well, so-and-so can only teach this, this, and this. And I'm like, and I had this conversation with 2 clients just the last couple of weeks, seems to be cyclical, is You do not build your schedule around when a teacher can teach. You build your schedule around what is good for your business, your students, and your community. Right? So if you're making accommodations because a teacher can't get there in time because they have some other commitment or they just don't want it, then that's not a good fit for your business. And it also goes down to the fact that, and we hear this a lot, it's just a side gig for them. It's just this, you're making excuses about the teachers. The thing is, they are, and you should view them as professionals. And it doesn't matter if they teach 1 or 2 classes a week or 10 to 12 classes a week. The expectation is the same. If they're looking at it as a side gig and you're saying, well, it's just you're toe tapping around that it's a side gig, then you're harsh truth. You are not putting value to what you do. You are allowing them to control the value of your class. You're saying you don't view this very valuable. That is valuable. The service we provide is incredibly valuable. It can be, as we know, life-changing, life transformative for people. So why would you say, oh, it's just a side gig? You're already kind of setting yourself up in your mind that what you're doing doesn't have that doesn't have value. Josh.
This is right notes as we go here too. The thing you just reminded me of is years ago when I was still living in the Earth Roamer with the family and we were traveling around. And I got a couple really interesting phone calls. So we'd maybe been going for a year. We had visited probably 50, 60 studios. We worked with a bunch at that point, had done a couple like longer term stays at studios to help with the business or whatever. So I'd get these phone calls of other owners through the grapevine that would hear about this. And in one case, the owner said, they phoned up and said, hey, I just think what you guys are doing is really cool. Can you just drive here and just take my studio? I'll give you the keys. You pay the lease so we can run it out for the next year. You just run it. You get all the profit or whatever. Like, which actually, I'm like, that's a pretty good gig, but we were not interested in doing that at the time. I said, well, no, but like, how can I help you? Why are you phoning me and making this call? And long story short, what shook out of it was they said, well, I just don't want to work weekends. So I've been closing the studio on the weekends or whatever. And I don't know, I had to say to them, like, the entire like mentality of approach on what you're doing is now off. Like something is out of whack. And it goes to what you're saying. Who is the business actually built for? It's built for you, the studio owner, but the person, like, who are you serving? You're serving the students. So by extension, that dictates your actions as the owner in many cases, hence the story that like this owner was like, well, I don't want to work weekends. So like, we're just closed on weekends, but do your students want to practice on weekends is the question. It's not that you can't ever close, but it's so upsetting. Carol just bounced. That's what this is, but who are you serving? So to your point, Terry, same thing with the schedule. It's not that we don't try to accommodate our staff and your teachers, and we don't try to work with them and be empathetic to the realism of life. And maybe it is a second gig for them and they're doing it more out of passion. Fine, cool. But that doesn't mean you lower the bar. And specifically with the schedule, that's the same task as anyone else. The schedule, who's the class for? It's for the students, not for the teacher. If your classes, if the type of class, the length of the class, and the schedule of the class is because the teacher said that's when they want to teach, then what you have done is you are paying for people to teach yoga, which sounds funny because that is what you're doing anyways. But what you aren't doing is building a yoga studio to serve people by giving them a yoga class. Those are two different things. So like, there's got to be a shift there. I want to take us back to something Carol said. I had another thought that came up while you were talking, Terry. Carol was mentioning the unicorn person, right? Like, if you have a manager and you're trying to switch them through, or what's even more common is you, the owner, want to get some things off of your plate. So what we commonly see actually is a studio will have the owner doing everything, a group of teachers who teach and maybe do one or two tiny little things, and then they try to hire a manager. So like they try to hire this other person and give them this really big title, but they also try to not pay them very much. So one thing that's I think a more outside of the box conversation in the yoga world than it should be is, if you're going to hire a manager, the job of a manager is to manage the business. In other words, it's their job to run the business, which could be a good move for you if it lets you do the other things that you're not. If it lets you work on the business, if it lets you do the things that pay your soul, if it lets you do the things that help you grow the business and pay you more money, and that person can just manage and integrate, that actually might be a good move for you. But again, like we were saying, if you externally look at your business and then say, is it valuable for me? Same thing here. If you step out and say, I want to hire Carol to come in and run this thing. Why would Carol do that for $20,000 a year? Or why would you say, like, I want you to run this whole thing, but I only have 15 hours a week? Also, like, don't have another job that conflicts with the schedule that I need for the studio. Like, it just doesn't make any sense. And I'm not, again, no shade, but just, if you're looking at a manager, if you're looking for that unicorn person who can do a bunch of things, and you're really going to give them the reins of not control with vision, but like control of the actual management of running your business, cool, but you got to fucking pay them. That's an $80,000 a year job, depending on the studio and the scale and the market or whatever. And maybe it's more than that, whatever. But like, that's a big, that's a big job. The reason I wanted to bring that back up is tying all this back together: staffing, this mentality of approach, what makes your business valuable, potential of hiring and managing staff in an appropriate way, and getting this manager in place. This is also part of an exit strategy. If you start looking at, going to the original thing we said, I'm going to build a business where I only put in 4 hours a week. If I want to, I put in more. I'm working on the business more than in the business, and it still produces profit and pays me something. That's super valuable. And if you do build it to that place, either you sell it because you just want to not do anything with it anymore, and the energetic cost is something you're not into. You expand it because you're like, cool, what if I had 10 of them, right? Or you do nothing. You just own it. One of the most successful studios I can think of is in Calgary, Alberta, Canada. It's been there for 20 years at least at this point, 19, 20 years. One owner, same original owner, put the time in, built the system. I guarantee you go in there and ask any of the students, they have no fucking clue who owns that business. They do not know, because the woman who owns it practices every day, but doesn't go behind the desk, doesn't manage the team, doesn't give them feedback. She teaches once in a blue moon when she thinks it's fun. She's not on the website, and that business runs itself and is, I know for a fact, is very profitable and has been the whole time. Like, one location didn't expand and do anything else, but like, why would she exit that business? It's a cash producing machine that she doesn't barely have to do anything with. That's just as good. But this planning with the end exit strategy, getting your staff in order, or whatever, it's all the same. Whichever path you end up on, it's the same thing. Go ahead, Jerry.
My final thought, and then I got to get it balanced to get ready for a KPI training with a client, is also, in the very wise words of someone we all know and love, who I called in a panic after my first studio sell fell through in June of 2020, what I was going to do. I called this very wise young Yoda, and he said to me, he listened to me as my tale of woe, and he just said straight up, Terry, your business is only worth what someone's willing to pay. Do you remember that call, Josh?
That guy sounds real smart. I don't know who you're talking about, but
yeah.
He's probably exceptionally good looking and has nice hats as well.
He does have nice hats, and he lives in Mexico. Maybe you'll run into him one day. But that's another thing too, is, what you think your business is worth, and even what it says on paper it's worth, it is really at the end of the day only worth what someone else is willing to pay for it. Right. And so granted, that was a very extraordinary time when that was happening. But that is also something else to keep in mind, is that someone wants to get this amount of money. And actually, I know someone who was like wanted X amount of money for their business. The bank valued it differently. Someone was going to buy it, but the bank valued it differently and said, I will only loan, we will only loan this amount of money. So the buyers went to the seller. The seller wasn't ready to budge. And so that sale went away. And then this thing called the pandemic happened not too long later. So, that's the other moral of that story too, is, sometimes what you want to get out of the business, the reality of what you want and sometimes the reality of what you can get can be two different things. So that's just something that's back to life too. Yeah.
Here's maybe my closing thought. And Carol, if you've got something to end us off with in a second too. Your business is only as valuable as what somebody is willing to pay for it. You're somebody. If you have an offer to buy your business and it's not enough for you to let go of it because you're willing to pay in your time, energy, financial commitment, risk, etc., then you keep running your business. So I just, as an extension, because I obviously 100% agree with what you're saying, Terry, it's just as an extension, when you're looking at what makes your business valuable, it's what makes it valuable on paper, what makes it valuable in a sale. It's okay, though, to also consider what makes it valuable to you. So if you're operating in a way that makes your business not fun, that's killing your enthusiasm or killing your soul, that is taking away from your personal well-being or your family well-being, that's not valuable to you. Mm-hmm. So the other thing about building in this way is like, make the business valuable to you. Build it that way. That's the bit. You are not your business. You become a yogapreneur the second that you fully embody the fact that you are not your business. Closing
nothing
thoughts,
else
Carol?
to add. Mike, you got that mic drop, like I have nothing
that was
else
a good mic drop.
I was trying to tee it up for her. All right. Have a great weekend. Last month of the year, get your KPIs done. I know Terry's doing KPIs. We're going to talk KPIs today. We didn't get to it. What are your KPIs saying? How are you doing this year? What are the numbers looking like? Did it stay the same? Did it change? Was there a surprise? Post it in the comments. I'd be really curious. I'm sure we'll have a lot of KPI conversation in the next month here.
Yeah. What's the story? I always like to say, what is the story your KPIs are telling you? And that's the real story. It's not the story that you think is happening. It's the story that is really happening. So find out what the story is, your business, and the number, as we say, numbers don't lie.
Ooh, okay. Well, we got subject matter for next week.
Yeah.
All right. Go save the world, teach some yoga classes, go do some yoga, all the stuff.
Bye all.